So according to the words of the question, we are told that if you change the price by 100, and the change can be any direction, so let's reduce it. The number of rooms will change by 40. So now that we have opted to reduce the price, the units go up. So this will be A minus 1480B minus 1480B. So we start solving this. And when you do so, you subtract there, so that you are left with 100 being equal to 40B. 100 being equal to 40B. So that from there, you are able to tell me that B should be 100 divided by 40, which is 2.5. Which is 2.5. You then proceed and say 4,000 is equal to A minus 1440 times 2.5. So you solve that and tell me B is what? Sorry, A. So I multiply this by 2.5. Then I add to 4,000. And I'm able to get 7,600. I'm able to get 7,600. And therefore, my price will be 7,600 minus 2.5 Q. Minus 2.5 Q. We also know that revenue is the price, 7,600. You multiply the price by the units. We know that revenue is the selling price multiplied by the units. So this turns out to be 7,600 minus 2.5 Q squared. The other thing that we know is that at optimality, if you want to make maximum profits, oh sorry, there is a Q here, Q, 7,600 Q minus 2.5 Q squared. And then we are saying at optimality, if you want to make maximum profits, that is possible when MR is equal to MC. Marginal revenue is equal to marginal costs. That's when you are in a position to make maximum profits. So marginal revenue nimesema 80 is coming from 40 plus this 40 because the margin changed by 40. The margin changed by 40 according to information 3. You can check on that. So marginal revenue is what you get when you differentiate this. So when you differentiate this, you will end up with what? 7,600 minus 5 Q. When you differentiate this function, that is what you get. Marginal costs Marginal cost is what you get when you differentiate total cost function, which you do not have. But we know when you have differentiated, what remains is the variable cost. So we are very much okay to say marginal cost is our variable cost. Marginal cost is the variable cost. So according to the question, we are told the variable cost is 1,000 per guest. The variable cost is 1,000 per guest. And we also know that a double room is hosting 2 guests. So you multiply by 2, and that gives you 2,000. We also know that a double room is hosting 2 guests. And therefore, 7,600 minus 5 cubed should be 2,000. And based on that, solve and establish the value of Q. So I minus 2,000, I divide by 5. You get 1,120 rooms. Yes, that's what you should get when you solve it that way. Then at that point, you now get the price by substituting that value in this equation. The equation their price is equal to the value. So you substitute Q there. You put 7,600 minus 2.5 times 1120. $4,800. I'm getting shillings. 4,800. So the question was asking us to get the price that will maximize the profits. So that is the price that will maximize those profits. That is the price that will maximize the profits in that company. Now from there we are told to compute the profits. In trying to do that, or for us to do that, we must draw what we call the income statement. Income statement. And as you know, in the income statement, we always begin with revenue. So we will get revenue from the rooms. Revenue from the rooms. Revenue from the rooms. We start with the doubles. Start with the doubles. We know revenue is the price times the units. So for the doubles, we already have confirmed that we are charging 4,800 per room. And we are also aware that we will have 1120 rooms. So that is what we shall get in one day. But we are also aware the event is for 5 days. So you multiply by 5. So you take your calc, and multiply by 5, and you are able to record 26,808,000. 26,808,000. We go to the SIGOs. When we go to the SIGOs, we are told that the fee per SIGO room is 3,000. And then the SIGO rooms, they are 15%. So it's 0.15 of 2,400 rooms. 2,400 rooms. And this is going to happen for 5 days. This is going to happen for 5 days. So once again, using the calc, you get 3,000 times 0.15 times 2,400 times 5. You get 5,400,000. 5,400,000. And now we go to the family rooms. Family rooms, if you look at the question again, you notice the fee is 6,000. The fee is 6,000. And this 6,000, it is being charged 10%. It is 10%. And not 10%. The proportion is 10% of the 2,400 rooms, and the event is for 5 days. So then we will say 6,000 times 0.1 times 2,400 times 5, and those rooms will generate 7,200,000. 7,200,000. From there, let us get now to say less variable costs. Variable costs in the rooms. Variable costs in the rooms. Variable costs in the rooms. So, starting with the double, we know so well that one guest, we are incurring a cost of 1,000, and the double has 2 guests. One room has 2 guests. And then the number of rooms are 1120 for 5 days. 1120 for 5 days. So if you take the calc, registering 11,200,000. 11,200,000. Then we go to the SIGO. Now SIGO, we are charging 1,000 per guest. And a SIGO has 1 guest. A SIGO room has 1 guest. And then the number of rooms are 15% of the 2,400. 15% of the 2,400. And then we multiply by 5 days. Multiply by 5 days. So 1,000 times 1 times 0.15 times 2,400 times 5. I'm recording 1,800,000. 1,800,000. Then for the family, we have 1,000. A family room is hosting 4 persons. So we have 4 times, the proportion is 10% of 2,400. So this is 1,000 times 4 times 0.1 times 2,400 times 5. It is 4,800,000. 4,800,000. From there, we have the fixed costs. The fixed costs in the rooms. The fixed cost in the rooms. We do have for the double. The fixed cost is 5,160,000. For the Seago and family, we are told it is 3 million. We are told it is 3 million. And I think with that, we are now in a position to get our net profit. We are now in a position to get our net profit as 26,880 plus 5,400 plus 7,200 minus 11,200 minus 1,800 minus 4,800 minus 51,60 minus 3,000. You getting that 10,500,000 and what? So that is the net profit, that 10,520,000. Are you okay? Okay. The question further continues to say that the management is planning to reduce the variable costs by 20%. So you are told to advise on whether that is viable or not. So you will proceed and say, after the proposed changes, after the proposed changes, variable costs per guest, will be 1,000 times 1 minus 0.2. And that must now be how much? 800. After we effect the changes, the variable cost per guest will be 800. So for the double rooms, marginal cost, which is also our variable cost, will now be 800 times 2. That is 1,600. For the double rooms, that would be the variable costs, which we are also saying is our marginal cost. Then at optimality, we know that our marginal revenue remains. So we will say 7,600 minus 5Q is now equal to 1,600. These marginal costs, our marginal revenue function remains. So the same way we had it up there. So based on this, we should be able to get, if you consult your calc, itakusaidia kujua 7,600 minus 1,600. If you divide it by 5, you get 1,200 rooms. 1,200 rooms. Alafu sasa, P will be 7,600 minus 2.5 times 1,200. So if you multiply this by 2.5, then you are left with shillings 4,600 per room. You are left with so this is what will happen. You will have to do another income statement, but now with these changes. With these changes here. For the revenue, now we are charging 4,600, and the rooms are 1,200. So you get the new revenue. The revenue for Seagulls and family, they made. Ukikuja hapa kwa variable cost, it is not now 1,000, but it is what? 800 per guest. And the rooms here are 1,200. Alafu sasa hiyo swali inasema there is additional fixed cost. Additional fixed cost. So additional fixed cost, according to the question, we are told it is 2 million. It is 2 million. So based on that, you will tell me the new profit, net profit. You will get the net profit. You will get the net profit. So do that quickly and tell me. Borrow, recompute your answer. It is not 11. Or did anyone else get 11 million? The net profit. Okay. So recheck your answer. It is 13 million and something. Maybe there is something you left out. Just check. So quickly do that so that we proceed. We have gotten that. So what do you think? Should they make the changes? Yes, the profit has gone up. Yeah, good. So on your own, you shall handle those two other questions in the handout that I gave you. You shall handle those questions together with another question here. There are two questions there in the handout. Together with this question of May 2019, question 5B. May 2019, question 5B. So let's look at transfer pricing. There are two questions in the handout. Let me see that handout. That's which ones. If you look at your handout on page 1, that question I gave you as an assignment. The second question on page 2 is solved. So I'm talking of the December 2000 on page 2 and the July 2000 on page 3. Yeah. Those are the questions that I'm talking about. Boro, hope you have gotten that. The two questions that follow. The first one I gave you as an assignment. The second one we solved. Then now I'm saying the next two you solve on your own. So that now tutakuwa tumebakisha two questions in that order. Is that so? Yeah, and those are the ones that we shall handle after discussing. So tuandike hivi. Transfer pricing is the process. Transfer pricing is the process of determining transfer prices. Is the process of determining transfer prices. It occurs where a company has been divisionalized. A company has been divisionalized been divisionalized on the basis of the various stages, through which a product must pass, before it is ready for sale. First of all, in these arrangements, the output from one department, is used as input, to another department. Stop. The department whose output is used, is known as supplying department. While the one that receives, or rather, while the one that uses, is known as receiving department. First of all, the item that is transferred, from one department to another department, is known as intermediate product. The last receiving department sells the product to the external market. On behalf of the company. The product sold to the external market, by whichever department is called final product. final product. Now, the one whichever that we have put there is expanding the definition of the external and the final, because the preceding statement had said the last receiving department is the one that sells to the external market. If you look at our case here at Destiny, you who are our customer, you happen to be our product, and we produce you in stages called sections. Now, right now, you have come from section 4. So you are the output of section 4 that became the input to section 5. Soon, you will be the output of section 5 and become the input of section 6. Now, section 6 is the last receiving department. It is the one that now will release you to the external market as CPA finalists. So when you go to the external market, you'll be deemed final product. But in between, tangu ulipoanza set 1 or wherever you began, you have been an intermediate what? Product. However, it is not the last department that can sell to the external market. There are also possibilities. Any department in between can also sell to the external market. Like most of you, you are already working as accountants, although you are not CPA finalists. So mmechomokea somewhere in the process, mukaenda to the external market. So when you have gone to the external market, you are still deemed what? Final product. That's why we have used the word whichever, so that you don't think that the final product only relates to the last receiving department. Then today we say, when handling transfer pricing questions, when handling transfer pricing questions, the following points must be considered. The following points must be considered. The following points must be considered. 1. A transfer price is a revenue to the supplying department. A transfer price is a revenue to the supplying department. Number 2. A transfer price is a variable cost. A transfer price is a variable cost to the receiving department. It's a variable cost to the receiving department. Next is transfer price has no effect on the company. Transfer price has no effect on the company. Another point is the revenue of the company. The revenue of the company is the revenue of the last receiving department. Is the revenue of the last receiving department. Yeah, the last receiving department. The next point is total cost of the company. Total cost of the company is the sum of all the costs in the departments, maybe you can put in brackets, this way. Own in the department, brackets own, excluding transfer costs. Excluding transfer costs. And then another point is any transaction with the external market. Any transaction with the external market by whichever department, whichever department affects the company. Affects the company. Yeah, those points, I will not mention any of them now because we will keep on reciting them as we have questions. So down there we write that when setting transfer prices, the following factors should be considered. The following factors stroke objectives, maybe you have not passed that. The following factors stroke objectives should be considered. Remember, in management accounting, we have very many words that are used to represent the same thing. Yeah? So you can talk of factors, you can also call them objects, you can also call them importances, you can also call them objectives, you can also call them characters. There are very, very many words that can be used. So number one is called goal congruency. Goal congruency. Goal congruency. Goal congruency. Next, naitwa performance measurements. Performance measurements. Next, inaitwa divisional autonomy. Divisional autonomy. Na huyo mwingine ni legal compliances. Legal compliances. So what we are saying is, when you're operating a company that has many departments, it is likely that people will start pursuing different directions. Like now, when I'm in this section 5, I may start pursuing something different from what the section 4 or the section 6 guys are pursuing. So we must ensure that our transfer price does not promote that, but it promotes all of us being congruent. That what I'm doing here, it is what mtu wa section 4 anafanya. It is what mtu wa section 6 anafanya. As in, we are all driving towards a common goal. We are all driving towards a common goal. Like now in this case, I'm supposed to teach you knowing that you must pass the exam. You are also attending the class knowing that you must pass the exam. The same case with counseling. But wewe kama umekuja hapa kupita mtihani na mimi niko hapa kufanya mambo ingine, then our goals are divergent. For example, it is very easy that a school like this one is just there to make money. They don't care whether you pass or you don't pass the exam. So wewe umekuja hapa kichwa yako ikwambia utapita. Lakini sisi tumekuja hapa vichwa zetu zikiwaambia tumekuja kutengeneza nini? Pesa. So we just do what we are supposed to do in a very short way because bora pesa imeingia. So sisi tunapasu pesa, wewe unapasu kupita. Then we are not what? Goal congruent. But kama in as much as we are pursuing money, the main goal is the students to pass. Na wewe your goal is also to pass because kuna uwezekano umekuja hapa si kupita mtihani. Maybe umejificha nyumbani kuja hapa maybe ni mtu amekwambia ukuje shule. Those kind of, there are different what reasons. Maybe hata kuna mtu wako hapa hakali mtihani, yeye anasoma tu aende akafanye biashara zake. They are just here for what? For knowledge. Yes. All those things are different reasons. The other thing is performance measurement. That one we will not discuss. because it forms like 40% of what is remaining in our discussions in the syllabus. So we discuss so much about performance measurement. And then legal compliances, hiyo hakuna maneno ya kuongeza. Divisional autonomy, it has to do with divisions making their own decisions. And we already have said that transfer price is a revenue to the supplier and a variable cost to the receiver. Now, a person who receives revenues becomes rich, and a person who makes costs becomes poor. Now, poverty or richness, or broadly, the money that you have determines how independent you are. I hope you know that. If you have money, you don't consult anyone. But if you have no money, you must consult everyone. And not just consulting, actually, you go by their terms. Even in the Bible, that if you borrow, you become a slave of whoever lent you. And that's why it's very, very important that you must work very hard to ensure that you get money. Unaelewana? Pesa si baya, pesa ni mzuri sana. Yo, unaniangalia like you are not believing what I'm saying. Pesa ni mzuri. Hata kuna mtu aliimba wimbo akasema pesa ni sabuni ya nini? Yes. It is only the love for money that is evil, but money is good. Again, it's in the Bible that money answers many things. If you have money, you don't have many questions. Any question that comes your way, you are able to answer. You are free. But when you don't, you are not free, including what you eat. You go to the house, you have no choice. What they have prepared is what you must eat. Lakini kama kuna pesa yako ukipata what they have prepared, you don't feel like eating. Unaenda tu hapo unakula. Yes. So it's very, very important that you ensure you get money. Money determines the freedom that you have. So the transfer price must ensure that each department is independent. We don't have a department that is too poor or a department that is very rich compared with the others. Because, you know, success attracts enmity. And I think in as much as I don't have time, I need to emphasize on that. You need to realize that success attracts enmity. Success attracts enmity. The moment you start, or rather, when you are just there and making no progress, no one has a problem with you. Hata hakuna mtu anaweza kuongelea mabaya. People are okay with you. Wait until you start making some progress. That's when you hear people saying, if you are ready, wanasema lazima akuwe amepata sponsor. If you are a man, maybe na meiba. You know those stories, eh? Yes. Because success attracts enmity. So, now where did I come from that? My point is, when you become successful, you must know people will be envious, and therefore you must know how to manage it. And one of the things of managing it is, when you start becoming successful, you need to move away from the people that you are with. And that's why you hear watu wakisema asubizi amelinga. Si kulinga. Kama sahi you live with people who do not have cars, and fortunes are improving on your side and you have bought a car, you need to move from that estate, you go to an estate where people have cars. Yeah? Yes. Because ukikaa na wenye hawana, at times I drive in some estates, unapata mtu hata kuondoka kwa njia ni shida. Someone is just walking, na anaona gari inamfuata. Na finally ukimpita unasikia hata mkitembea na magari bado mtakufa. Sasa unashangaa shida yake ni nini? Even in family setup, if you happen to improve, usikae tu hapo na your brothers and your sisters. Enda ununue uwanja mahali ujenge, ukaange huko unakuja mbele. Lakini haiwezekani, you are doing so well, you are driving into the compound when your brothers are walking. Kwako kuna piko nyama almost every day na chapo, when your brother anakula githeri yenye haijakarangwa, and then you think life will be comfortable. No. Those are the times unasikia mtu ameanza kuimba kawimbo Na ukisikia hiyo wimbo unajua na mtu inaelekezwa. Unatembea tu unasikia mtu akisema hata mkikula nyama bado mtakufa. Those kind of things. Ati mtoto wako anatoka kwa nyumba amebeba mkate na sausage, na mtoto wa brother yako hata ugali ya jana haikubaki, wako hapo nje. There will be a fight. I don't know whether you see these things. And because most of you are still very young and you are getting into that field, uanze kujipanga. Usikae hapo, usiseme ati watu watasema unalinga, si maliko. You will have more trouble kukaa hapo liko ukienda. There's another guy who was telling me that, oh, nini usikuje kukaa hapa ushago mimi. Sisi tuko na magari na tunakaa hapa. So juzi he called me akaniambia nimeamua kuhama. Akamwambia I told you. Huwezi kaa hapo. Huwezi, sababu sasa hata bibi akisimama kanisani kuongea watu wanasema ona maliko. Akinunua kumpia, you see everything that you do. Because you have left that level. So lazima ufanye nini? Utoke. But kama unataka kukaa na wao, kaa tu wenye wako. Ukikaa tu hivyo hakuna mtu wako na shida. Unaona hata sasa 5 ukikaa hivi, wale marafiki mko na wao hawana shida na wewe. Wait until wasikie umepita. Aanza kuona mtu mwingine inaanza. Lakini ukikaa 5 miaka yote, people are what? Comfortable. Kama una the first degree, people will be comfortable. Wait until you say you are pursuing the first degree. You unaona shida. Yes. And it's very unfortunate that most of us nowadays, they invite trouble by relaying our intentions to the world, even before they mature. If you are a young person and maybe you have gotten someone and it looks like you get married, munaenda mahali unachukua ka selfie unatuambia future husband, future wife. It's dangerous. Umeanza kupata tu pesa unaona utanunua kagari. Sasa ukienda Mombasa kuangalia gari ukiwa pale SGR Mlolongo unachukua ka picture on my way or off to Mombasa to get my car. My friend, it's dangerous. Because success attracts what? Enmity. So just deal with the enmity that you cannot prevent. For example, when you buy a car, sasa huwezi weka gari kwa mfuko. Si lazima utembee nayo. Sasa hiyo wakiona mahasira ikikua, hiyo utadili nayo. But don't tell them before you buy. Wacha waionage ikitembea. Wacha waone umeolewa ama umeoa. Wacha waone mtoto wako mahali ameenda. Lakini si kupost mpaka ati sasa we are going to kindergarten, starting school today, going to Form 1. Those things are dangerous, my friends. They will make life very difficult for you. As we go by and by, we'll be telling you, even when you are working in the accounts department, you need to be very careful. It is only an accountant who raises eyebrows when they buy something new. When you drive into the compound in a new car, that is the time they say mwizi ameingia, mwizi wa mali yetu. But any other person akinunua gari, akinunua kiatu, no problem. So you must be careful. Hivi si uko kwa account alafu natuonyesha receipt ya mahali umetoka lunch, nimetoka Java, nimetoka wapi. You will invite a lot of trouble. And that trouble, you will not be able to deal with it. It will bring you down. So let's proceed. We write that the following methods are used. The following methods are used. In setting transfer prices. In setting transfer prices. One, market price. Market price. Right, that this is where transfer price is equal to the prevailing market price. the prevailing market price. It is preferred where the intermediate product has unlimited external demand. However, any selling cost should be deducted from the price. Any selling cost should be deducted from the price. The method enables the supply manager to make profits. And provides choices. To the receiving manager. Yeah, I think that is very clear. No need for further discussion. Number 2, inaitwa marginal cost method. And write that this is where transfer price is equal to the marginal cost of the supplying department. First, it is used where the objective is to maximize profits. And the supplying department has idle capacity. The method provides the most optimal transfer price. So I think that is also clear. Remember, tumekuwa tukisema at optimality, marginal revenue equals marginal cost. That's why we're saying it's the most optimal. Number 3, inaitwa total cost method. Right, that in this method, transfer price is equal to total costs of the supplying department. Total cost of the supplying department. The method enables the supplier to recover total costs. The method enables the supplier to recover total costs although the sharing of fixed costs is usually contested. Cover total cost, although the sharing of fixed cost, I think I should have said that. Although the sharing of fixed cost, is usually contested. The sharing of fixed cost is usually contested. What do you mean by that? If you remember a bit of your cost accounting, kuna zile sheets tulikuwa tunachora za distributed to allocate overheads. And there were bases zilikuwa zinatumika kama area, units, hours, and so on. And those bases, they give different amounts. So the supplier, mwenye anauza, would want a base yenye itampea pesa mingi. Receiver, mwenye ananunua, would want a base yenye inaleta pesa kidogo. So there is always a disagreement. There is always an argument on which one should be used. And because finally a base must be used, mwenye ataona haitamfavor, anaachwa na hasira. And with time, your hasira, it grows and it may erupt into something bad. The next method is a cost plus method. Cost plus method. Cost plus method. And right that this is where a profit element is added. A profit element is added to the total costs. First, the supply manager is able to make profits. The supply manager is able to make profits but the final product may become uncompetitive. But the final product may become uncompetitive since it will have a very high price. It will have a very high price. A very high price. So you assume that we have two departments, Department A and B. There is the cost. A, wameika 100. And then there is the profit. To sell a profit is 20%. So 20% is 20 here. So they are going to sell at 120. So wakiuzia B ataichukua at 120. Na yeye aongezee his own cost. So hii itakuwa 200. So 200 akiweka profit at 20% is 40. So he will sell that product at 240 in the final market. Now when he meets with his competitor in the market who does not recognize or does not use the cost plus method, the competitor atakuwa amecharge his product 100 and this one 80. So that is 180. Akiweka 20% of this, 20% of this itakuwa 36. So his product will be selling for what? 216. And remember, this is a perfect market structure where goods are the same. So the goods are the same. The difference now is in terms of the price. So any reasonable customer will buy this one and leave this. Now, why we are losing out this is because we chose to include some profits here. And remember, we said transfer price has no effect on the company. So the net result hatujasaidika, but tumepoteza in the market. So as the owner of the company, you are in a dilemma. Do I please my internal managers and then I lose out there? Or do I ignore them and I gain in the external market? What do you think is better? Yeah, good. You should gain in the external market because what you gain there, you utakuja kuwaletea uangalie. And they will eventually also be happy. But ukipoteza huko nje na hapa ndani bado umepoteza or there was nothing, then eventually you have nothing to give to these guys, and they will go, or the company will collapse. The next method inaitwa negotiations method. Negotiations method. Negotiations method. And we write that this is where the managers of the departments, negotiate for a transfer price. Negotiate for a transfer price. The method enhances teamwork. The method enhances teamwork and conflicts resolutions. However, it is a good ground for conflicts. It is a good ground for conflicts. Yeah, I think that is very clear. That is very clear. Nothing much to describe. So finally, let's international transfer pricing. International transfer pricing. International transfer pricing. Right, that this occurs where the supply and receiving departments. This occurs where the supply and receiving departments are in different countries. The concepts discussed earlier apply. Concepts discussed earlier apply together with the following additional factors. Apply together with the following additional factors. What we mean by that is all what we have discussed was in relation to domestic transfers where the departments are in the same country. But ukivuka mipaka, the concepts will still apply, but there are some other issues that you need to bring on board. One, taxation. Factor number one is taxation. I don't know whether we need to write that. What happens is, if you are transferring goods to a country that has a higher tax, you should overstate or understate transfer price. What do you think? Adika, you are not quick to get that. Adika. If the receiving department is in a country with a higher corporate tax rate, transfer price should be overstated. Transfer price should be overstated to minimize taxes payable. Yeah, that's what I wanted you to say. tushasema transfer price is a variable cost to the receiver. So what you do, una overstate the transfer price. Your cost yake inakuwa juu. Cost ikikuwa juu, si profit ni kadogo. So when they are charged the higher tax rate, they just pay a small tax. Number 2, custom duties. Custom duties. Right, that if custom duties are high, transfer price should be understated. Transfer price should be understated. Yeah, remember duties are usually charged on the value of the goods. So you don't charge a very high price, then you end up paying a very high duty. You end up kidogo so that you pay a small duty. Another factor is minority interests. Minority interest, and we say transfer prices must be set in a way. Transfer prices must be set in a way that minority shareholders will not feel shortchanged. Minority shareholders will not feel shortchanged during profit sharing. Not feel shortchanged during profit sharing. Now, what happens with most governments? When an investor comes, unapata those guys who are in government wanamwambia lazima utupatie shares free of charge. Ndio uweke kampuni yako hapo. So they end up becoming the minority shareholders. So in the day of sharing profits, the minority obviously will get a small share. Now when someone is getting something small na mwingine anapata kubwa, yule wa kupata kidogo kuna uwezekano ya kuanza kukasirika. That's all? Kuna uwezekano ameanza kukasirika. And hiyo makasiriko it can be dangerous. Huyo mtu akikumbuka uko kwao. You cannot come to my house and take a bigger roof than I'm taking. Kateneza have around you. But kama niko na njaa, alafu ukule mingi na uko kwangu ama uko kwetu, I will have to deal with you. So you must get to know how to deal with that. Next is anti-dumping rules. Anti-dumping rules. Anti-dumping rules. And either transfer prices must not suggest or must not create. Transfer prices must not create suspicion of dumping. Must not create suspicion of dumping. See, for example, like where I come from, maziwa 1 liter tunauziwa 30 bob. But here in Nairobi, 1 liter is 100 plus. So nikitembea Ushago, then I come with 1 liter of milk, nikwambie ninakuuzia 30 bob. Chances are utaanza kususpect maziwa ni ya kuibiwa ama is it good? Lakini haina shida, it's only that the cost that I'm quoting to you is too low to be true compared with the prevailing what? Yeah. So while your total production cost could be so low, when you go to the market and you find the prices are very high, you also overstate. Don't just say that yangu sababu nilipata na kidogo nitauza kidogo, hapana. Lakini hiyo maziwa nikikuja nao nikwambie hii nakuuzia 90. And ukienda kwa supermarket utaipata na 100. That may not be a big deal because the looks as good. I don't know whether you remember sometimes back kulikuwa na batteries zilikuwa zinaitwa Tiger Heads. You remember? Did you find them? Kama hii mmekuja wakati wa rural electrification. Kila mahali kuna stima. Those batteries zilikuwa zinauzwa 20 bob na zingine zilikuwa zinaitwa Eveready, they were going for 60 or 70. Na hii Eveready imetengenezwa hapa Nakuru. Hii Tiger Head imetoka all the way from India. Now if you try to think, wametengeneza huko India cost of labor material nini na ikatolewa India mpaka ikakuja Kenya na ikikuja huko ushago kwenu it is going for 20 bob. Are those guys really in business ama ni mahali ya kudamp wanatafuta? Does not make sense. Everett ni hapa Nakuru, mahali hata unaweza tembea. But you are getting it at 60. Lakini ingine imetoka India, it is 20 bob. So those things can create suspicion. Another one is profit repatriation restrictions. Profit repatriation. Profit repatriation restrictions. And write that if the restrictions are strict, if the restrictions are strict, if the restrictions are strict, transfer prices should be overstated. Transfer prices should be overstated in order to transfer profit back home. In order to transfer profits back home in the name of cost. In the name of cost. You see, you may go to a country and they tell you wewe fanya biashara hapa, lakini ile pesa yote unapata uweke hapa, usipeleke nyumbani. So in that case, unaficha. Just like now myself, I come from Murang'a County. I'm working in Nairobi County. So Nairobi County, if they decide to tell me ile pesa napata hapa, ibaki hapa, nisipeleke even a single coin to Murang'a, I may not find that very good. I will get away of, and most of us we are like that. Most of us, I don't think we are born residents of Nairobi County. Nikukuja tumekuja. So wakikwambia chenye utapata hapa Nairobi ibaki hapa. So why peleka anything where you come from. It may not be very good because ulikuja hapa kutafuta. Sisi tunasema tumeenda kutafuta. Na ukitafuta unaacha mahali ulipata. Unapeleka nyumbani. Ni kama sasa hata hapa Destiny nikwambia hii masomo umesoma hapa uache hapa. Hii kitabu uache hapa. Oh, you came for it. So now that tumeipata si unabeba unaenda na mahali ulitoka. Yes. But now the governments of those countries may refuse because at times it looks unfair. I think I have to mention this because now I have to keep this tafanya swali kubakisha 6 minutes. You see, like China, they give us the loan. And we know that. Sasa hii loan tutawalipa principal na tuwalipe interest. Then on top of that, these guys, they said they are people to come and work on this project in the name of expatriates. Mpaka ile kazi ya mikono yenye sisi tunaweza jifanyia wanaleta watu wao. I remember sometimes back, Matiang'i stormed into one of their sites. Akauliza, do you want to tell me hapa Kenya hatuwezi pata mtu wa kukaa kwa gate anafungua mlango maroli zikiingia na anafunga hiyo gate, that you have to get a guy all the way from China to do that? It's unfair. Then on top of that, these guys may take over the project waanze kuimanage in the name of getting profits wajilipe. Like I hear, that's what they are going to do with the expressway inajengwa hapa Mombasa Road. I don't know whether even SGR wameanza kufanya hivyo. So if that is what they do, then you are just at their mercy because they may not even tell you the true position of how much has been generated. So atakaanga tu akikwambia hii biashara haifanyi kazi, I mean it's not doing well. And that now is not good. You can imagine, and we have seen people protest. Unaona hapo kwenu kuna jengwa barabara and you are there jobless. Na hiyo mtaro wanachimba hapo unaweza chimba upewe hiyo 500. Watu watemeleta mtu kutoka huko ati anachimba mtaro hapo kwenu. Kama kuna mti inakatwa hapo ni wao. Is it good? No, people protest. People protest. So when you go there because they must finally protest. They must finally do what? Protest. What you do, unaificha in the name of the cost. Ni sawa unaweza waambia sasa mimi sitaleta watu wa mkono hapa kufanya kwa site, leteni watu wema. Lakini engineer ni wao ama accountant ni wao. So kama accountant alikuwa normally alipwe 100,000, alafu watu wengine wa mkono ungewalipa zote toto zao zikuja 100,000 watu wako. Total wage bill ingekuwa 200,000. ukilipa watu wako, accountant or the engineer and these other guys. Total wage bill ilikuwa 200,000. So what you do, unawaambia now, my accountant, mshahara yake ni 230,000. So hiyo mshahara ya watu wote inachukuliwa na mtu mmoja. Alafu sasa unawaambia leta watu wako, kila mmoja unamlipa 200, 300 hivi, kidogo kidogo, at least waone wanafanya kazi. So ile pesa umelipa accountant, naye unamuita kado, unamwambia hii 230 yenye imeingia kwa account yako, mshahara yako hapo ni 100. Hiyo ingine ni ya kampuni. So people do like that. These are realities on the ground. Unaificha hapo, sasa ikifika huko yeye anakurudishia na yeye anakula yake. Unaenda. Yeah. The other point that you need to mention is foreign exchange rates. Foreign exchange rates. Foreign exchange rates, another factor. And write that transfer prices should minimize. Transfer prices should minimize translation losses. Should minimize translation losses. Kwa FR mlisoma mambo na ilikuwa inaitwa foreign branches, how to convert those kind of things, and when you convert there is always either a translation gain or a translation loss. So you must do your logistics in a way that you maximize gains and minimize losses. NB. Appropriate measures should be taken. Appropriate measures should be taken to safeguard against application of the concept of non-related parties. Against the concept of non-related parties. Non-related parties by the host's government. By the host's government. By the host government. What do you mean by that? Hiyo ujanja yote tumeongelea hapo, you are not the monopoly of that knowledge. Hata wao wanajua unaweza kuwa unafanya hizo vitu. So what they do, they apply the concept of unrelated parties. Wanasema kama hamungekuwa departments of one company, how much would you have paid for this? So they revise the accounts. And when they revise, they tell you this is how much you should pay. So kama in your books, ulikuwa umesema unastahili kulipa tax ya 1 million. Alafu wa revise their books, wapate unastahili kulipa 7 million. You have no choice, you must pay the 7 million. And if you feel like not paying, park and go when you ban. And as you park and go, they will not allow you to carry anything. And the government of the day is very, very much able to do that. All that they need is kushika hapa moyave ni ukitembea and were declared an illegal immigrant. The next thing unajisikia kwa police station, Jomo Kenyatta, waiting for the next flight back to your home. With all due respect, I hope you remember how it was done for Miguna. Hata hakupewa nafasi ya kuvaa kiatu, alienda na slippers. That's how it's done. Or these are the guy called Chinedu, the guy who had already called a king. Yeah. When they quarreled, jamaa anakuwa declared what? Illegal immigrant. Unajipata nyumbani empty-handed. Or the government wakes up one day like what the late Mugabe did. Anasema Mugabe revoked all the title deeds of the land that was owned by the Britons. Akasema kuanzia leo hakuna title deed ya mzungu hapa. Kama ulikuwa nayo uende nyumbani immediately. And the guys had to leave with bishara na serikali. So what you do as a business person, you need to take appropriate measures. That's what we have said there. Appropriate measures include talking the politicians of the day and supporting their activities. Ukikuwa na project kidogo, tafuta watu wake wenye hata hawana experience, unawapea kibarua hapo na pale. You know that makes the politician more because anasema niliwatafutia job. Now he cannot speak against you. Then wakati wa campaign kama sasa hivi tunaelekea BBI na 2022, unamrushia some few coins anaenda campaign. Kama uko na lori kubwa unampea inaenda road show. Kama uko na printing company unamprintia ma t-shirts, makofia, unamwekea billboard. They will be very happy and they will support you. But if they are against you, they only need to stand one day and say, this company, we need to think about it. I hope you remember the other day we were told to resist. You remember? Huh? And people resisted. And the companies that were mentioned suffered. You only require a politician to go to his home village and tell his villagers or his fellow villagers that nyinyi mko maskini hapa sababu huyu mgeni ndiye alikuja akachukua mali yetu. And people will react. And you cannot control it. Yeah. I remember in our place there is a guy, although he passed on recently. We bought at Del Monte, those who have used that road. And Del Monte has taken a big chunk of land. So that guy was vying for MP. Kwa anakuja anatuambia hii shamba ilinyang'anywa our grandfathers. Na ndio sisi hatuna mashamba. Na ni kweli hatuna mashamba brother. Hata mimi mahali nimejenga nyumba yangu kwa fence to fence. Jirani akiweka fence hivi na hivi, siwezi rudi huko nyuma. Labda nitoboe mlango pale. Those are realities. Yeah, those are realities on the ground. Now that guy printed some forms alikuwa na circulate. Anasema mkinichagua MP kila mtu hapa 3 acres. Taingia hapa kila mtu 3 acres. Na ni shamba unaona si hadithi ati unaambiwa utapewa Lamu ati mahali hujaona ati utapewa Rockchobio mahali uoni. Ni hii kwa hapa sinaambiwa si ndio hii. And people are supporting him. It's only that he missed the seat by few votes. So those things, as a politician, you must know how to build them. So if you are the manager of Del Monte, you needed to see that guy kando na mwambia hasa wewe mzee pitia hapa kando. Si unajua what happens. Sasa akipitia kando si anakuja anawaambia tumeona that we really need Del Monte to be here. It creates jobs. Sasa wewe kama mwenye biashara bado biashara yako inafanya nini? Inaendelea. That's how these things are done. So thank you so much. We call it at that point and we come from there to the next lesson.